Rising geopolitical tensions in the Middle East and recession fears keeping the energy sector on edge. Joining us now is Daan Struyven, Goldman Sachs head of oil research. Dan, it's great to see you here. Kind of in this offsetting currents, I guess, in the energy markets. Oil's been in this range. What do you think is the key swing factor here?
Yeah, so we have been calling for Brent in the 75 to 90 range. We did test the lower bound, the floor, last week. From here, we think we move a bit higher. Positioning is very low. Net managed money by money managers is at the lowest level since 2000. We still think we're going to see some draws during the last part of the summer season. But looking into next year, we think the risks are skewed to the downside.
And that's because of the economy, demand?
We do think that demand growth has slowed and is sort of normalizing to its long-term trend, just above 1 million barrels per day. The last big post-pandemic boost from the jet fuel recovery is now behind us. And I think the upside is capped by OPEC's plans to bring those barrels back from October onwards if the market allows it.
What do you make of the way the market either, has or hasn't or has occasionally reacted to these flare-ups of geopolitical conflict? I mean, sometimes it sort of shows you what the market kind of is primed to do anyway. But I mean, how are we digesting all these things?
I think the sensitivity of the oil price, the flat oil price, to geopolitical tensions, with still ongoing wars both in Ukraine and in the Middle East, has diminished over the last 2 quarters. I think the key reason is that we haven't seen significant disruptions to oil markets, to oil supply. And second, there is a lot of spare capacity, meaning that if you were to see, for instance, a drop in supply from Iran, that countries such as the UAE or Saudi Arabia would likely step in, fill in the shortfall, and keep markets pretty balanced as they have been over the last 2 years.
I guess, with U.S. production where it is in terms of being at a record at this point, is it just a smoothing effect? And what does the refilling of the SPR mean, if anything?
So currently the SPR is being refilled at a fairly slow pace, call it 3 million barrels per month. The level of the SPR inventories is now quite low, but you could argue that with the U.S. now being a net exporter of oil, that the sort of equilibrium SPR level that you need is smaller.
Yeah, I mean, I remember going back and looking at what the SPR was in the 80s and how many months or weeks of U.S. production it would take to refill it, and it was a lot. And now it's almost nothing, right?
Right.
We would be able to do it quickly if we had to. How much downside, though, do you think ultimately, when you mentioned you think maybe we bounce here in terms of crude prices and then maybe go lower from there?
So base case for next year is still Brent in the low 80s, WTI in the high 70s. But I think the risks are skewed to the downside because of a lot of spare capacity. The possibility of a recession, definitely not our base case. But our economists see sort of a 25% probability. If that were to happen, and if OPEC were not to respond aggressively by cutting production further, you could see a potential drop in oil prices of up to $30 per barrel in a median-sized recession.